Welcome to Planet MicroCap. I'm your host, Robert Kraft, and joining me today is Kathy Casey. She is the CEO of Simply Better Brands. It's a publicly traded company. I got two symbols for you: SBBC on the TSX Venture and PKANF on the OTCQB. And Simply Better Brands will be presenting at our in-person investor conference, the Planet MicroCap Showcase Vancouver, happening September 6th and 7th, 2023. For more information, to meet Kathy, to see the Simply Better Brands presentation, hear more about the story, please go to our website to register, planetmicrocapshowcase.com. And with that, Kathy, thank you so much for joining me today. How you doing?
Hey, thank you, Robert. Looking forward to it.
Absolutely. So are we. And actually, this is our first time doing an interview together on Planet MicroCap. And so for folks that haven't heard the Simply Better Brands story, can you start us off with that quick overview and history of the company?
Yeah, sure. Absolutely. The way to think of Simply Better Brands is that we're a wellness company and we're a growth company focused on wellness. We grow organically and through M&A. And we really operate in three verticals. One is clean ingredient food, next generation skincare, and plant-based wellness. We invest in three really focused brands. One of them is TrueBar. The second one is No BS Skincare. And the third one is PureKana. TrueBar is a natural, organic, gluten-free, vegan protein bar, experiencing incredible growth right now. No BS Skincare is a very clean ingredient skincare brand, growing at a rate faster than the category. It bans 1,600 ingredients, and we're seeing lapsed consumers of big brands come over to No BS Skincare. And the last one is PureKana. It's the #1 direct-to-consumer CBD brand here in the United States, among roughly 4,000 brands. We took the company public back in December of 20 on the venture board in Toronto. And since then, we've really done about 5 acquisitions, all of them in the same health and wellness and beauty space. If you look at a little bit at the revenue numbers or profit numbers, we did about 15 million, a little over 15 million back in 21. It took us to 22 million then in 22, it took us then to 65 million. And our outlook for here in 23 is actually about 80 million. All of those are USD. So essentially tripling or quadrupling the company year over year. And so that's why I say we're definitely a growth company. The reason we want to spend some time with you, Robert, and then also in Vancouver, is that although we're a growth company, there's very, very little awareness. And if you look at our current market cap, you'll see that we traded about 20% of our annual revenue. So certainly, if you will, an awareness story here as it relates to Simply Better Brands.
For sure. So to help give some more perspective on Simply Better Brands, because it's a holdco, health and wellness, and yet these various different verticals within that. So yeah, I'm a little curious as to how you found these brands that you wanted to work with, and maybe some of your criteria, because clearly you grow through acquisition as well. You're going to be looking at more stuff, I'm just assuming, right? So love to understand how you came to those brands, and then your criteria for new potential brands to come under the Simply Better Brands platform.
Sure. The company originally was started as a wellness company. And what we did, candidly, is we go around the United States and we look for passionate founders that have built these incredible brands, but maybe they've taken as far as they can with either their own resources, their own financing, or with their own capability. Sometimes, as you know, entrepreneurs can get brands to a certain level, and that helps to surround them with some capability and structure and resources and really fuel their growth. And so if you look particularly at TrueBar and also at No BS, the founders actually of those companies are still with us today. They still run those companies for us because we think there's no one in a better position to do that than those particular women. They happen to both be female CEOs, similar to me. And we look for a couple of things. One, we look for great brands. We look for brands that differentiate in the category. We look for brands that are on trend. They absolutely have to be clean ingredients. And ideally, when we buy them, we prefer not to buy any brands, of course, that burn cash.
Aren't we all, right? Isn't that
yeah, exactly?
That's the ideal. So and Kathy, what's your background? I mean, how you're CEO. I'm assuming you're not the founder. So what was your background prior to Simply Better Brands?
Absolutely, I spent about 10 years at Procter, like a lot of CEOs around the United States. Left and did a startup for about 5 years. We imported Italian food. Then spent about 20 years at Kellogg. I ran a $2 billion business at Kellogg, working really across every brand of Kellogg and every class of trade. So club, drug, dollar, discount, e-commerce, Amazon, et cetera. And so really what I bring to the party is not only strong sales, marketing, and general management ability, but the opportunity to take these brands that were primarily direct to consumer brands and then figure out how to have them continue to grow direct to consumer, but then also take them into omni-channel environments by putting them into brick and mortar distribution.
Love to hear more about your experience at Kellogg. I mean, you were there for 20 years. I mean, what was your primary responsibility there?
Sure, I've done work in marketing, sales, if you will, sales strategy, kind of connecting marketing to sales. And then ultimately, as I mentioned earlier, ran a $2 billion P&L, which is roughly about 25% of the Kellogg company. And what we really wanted to do is we wanted to take these incredible brands that Kellogg owned, brands like Pringles and Cheez-It, Rice Krispie Treats, and figure out how we put them into different channels with different shopping missions and consumers that shop those said channels. And so we really morph these brands, if you will, to the right price, pack, and architecture that we could convert that consumer at that point. And that's really the capability that we're employing here at Simply Better Brands. Buy brands, build brands, and if at some point, if it makes sense, sell those brands and then go buy other brands. And so we do grow, to your point, Robert, we grow organically, we grow through M&A, and the organic growth comes through both category expansion and channel expansion.
Very good. So there's 1,000 more questions I want to ask because I want to learn more. But we invite you all to come to Vancouver or watch the presentation online to learn a bit more about Simply Better Brands. So the final question for you here today, Kathy, before I let you go, and from what you can tell us, what would you then say are some of the company's value catalysts now for the rest of 2023 going into 2024?
Yeah, absolutely. If you look at, I think our number one catalyst is the conversation we're having, which is because our market cap is so low compared to our annual revenue, just by virtue of getting the noise, the story out as it relates to Simply Better Brands, we think in of itself should engage more people into the stock. The second one is that I look at our near-term opportunity, it's really TrueBar. So, Robert, we did about $1 million on TrueBar back in 21. In 22, we did 10 million, and then we're targeted this year to do 30 million. The brand is not only indulgently great tasting, but because of its clean ingredient deck, it's resonating very, very much with consumers and retailers. I always say in my career, a couple times you have what I call a genie in a bottle. An incredible opportunity comes forward with a brand that's well-timed and connecting with consumers, and that brand is TrueBar for us. So in terms of catalysts, you'll see, we believe, continued news about not only category expansion of TrueBar, but then also channel expansion with some incredible blue chip retailers to be able to put that brand in a variety of different environments. If you look at bars and, if you will, the trading multiples, TrueBar alone right now is about $100 to $120 million value. That's just one of the brands within the company.
Very good. All right. Well, with that, Kathy, where can our audience go and find more information on Simply Better Brands?
Sure. Go to our IR website, just simplybetterbrands.com. And I really look forward to spending some time with more folks in Vancouver.
Absolutely. Well, Kathy, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. And I'll see you in Vancouver.
Okay. Thanks, Robert.
Thank you.